So imagine engineering the flawless atomic-level dirt that the entire global AI revolution is actually built upon, like maintaining a total monopoly among the world's top tech giants and still watching your quarterly operating profits just crater by over 80%.
Yeah, it is literally the ultimate paradox.
Yeah.
And welcome to the Japan Stock Podcast, by the way.
Right, welcome. Today, we are doing a deep dive into SUMCO Corporation. We are basically opening up the engine room to see what is really going on.
Exactly, because if you are a retail investor looking at the semiconductor landscape right now in late 2025, I mean, it is so easy to get totally mesmerized by the shiny stuff, right?
Oh, absolutely. The companies designing the chips, the foundries stamping them out, they get all the headlines.
But SMKO operates at this completely invisible foundational layer. And today, our mission is to put their corporate mandate, what they call the SMCO vision, to the ultimate stress test.
Right. We want to see if their strategy of maintaining stable profits can actually survive the macroeconomic sledgehammer that's hitting the markets right now.
So to do that, we kind of have to define what SEAM-MCO actually is, or like filter out all that glossy PR noise.
Yeah, applying the 80-20 rule here, we need to focus strictly on what actually drives their needle. So technically speaking, SEMCO is a pure-play silicon wafer manufacturer.
Right.
But the real story, the thing that matters, is their global top share in advanced 300mm wafers for logic and memory, specifically the ultra-pure wafers required for high-bandwidth memory, or HBM.
Okay, let's translate that into a visual for the listener, because, I mean, 300mm wafer sounds incredibly dry.
It really does.
Think of the AI revolution as the biggest gold rush in human history. You have companies like NVIDIA or TSMC, and they are acting as the merchants selling the gold.
Right.
SEMCO, they aren't selling the gold, they are engineering the flawless atomic-level dirt that the gold is actually pulled from.
That is a great way to put it.
To make HBM chips for AI, you have to stack memory chips vertically, almost like microscopic skyscrapers. And if the silicon base, the wafer that SEMCO makes, isn't perfectly flat down to the fraction of a nanometer, those vertical electrical connections just fail.
Yeah, the whole stack becomes very expensive garbage.
Exactly.
And the market dictates that quality. Like 100% of the world's top 10 semiconductor companies are SUMCO clients. Not a majority, every single one of them relies on this atomic precision.
Which is wild. Without SUMCO's ultra-pure silicon, the entire AI and cloud data center ecosystem basically grinds to a mechanical halt.
It does. But, holding that top spot didn't come from a linear path of unbroken success. If you look at their corporate DNA, SMCO is a company defined by its past traumas.
Oh, the drama of adaptation. I find this to be like the most fascinating part of their psychology.
Yeah.
You go back a decade or more to the Lehman shock and the subsequent market crashes. I mean, the semiconductor industry is notoriously cyclical, right? It goes through these violent boom and bust phases.
Brutal cycles, yeah.
And during those historical downturns, SMCO bled cash heavily because they were carrying massive fixed costs while demand just evaporated.
Right.
Those deep scars almost broke the company, but they also forged their current armor.
Yeah, those near-death experiences basically birthed the SMCO vision, which is essentially a corporate vow to never bleed out during a cyclical trough again.
To secure baseline profitability no matter what the macro environment is doing.
Exactly. But that armor is currently taking heavy fire in a very real virtual battle against their competitors right now.
Which brings us to the sandbox they are playing in. If SMCO owns the ultra-pure dirt for AI, who are they fighting for the rest of the market? Because let's be real, not every electronic device needs an AI superchip.
No, definitely not. And that is where the paths violently diverge. We are looking at a rising tide of Chinese legacy wafer manufacturers right now.
Right.
Driven by state subsidies and a need to bypass advanced technology restrictions, Chinese firms are aggressively expanding their output in smaller legacy wafers. We're talking about 200mm and below.
The lower end stuff.
Yeah, the foundational components for basic consumer goods, standard automotive chips, everyday household appliances.
So where volume and price slashing are the name of the game, China is essentially flooding the zone to monopolize the commodity chips.
And SCMCO knows they cannot win a subsidized volume war. They just can't. So they have chosen what we can call Path A, which is a ruthless, systematic retreat from the low-end market.
Wow.
The hard evidence is in their recent structural reforms. By the end of 2026, they are entirely shutting down their 150mm and 125mm wafer production at their Miyazaki plant.
Wait, so they aren't just letting those product lines naturally age out over the next decade. They are actively pulling the plug today?
They are pulling the plug. And it comes with an immediate financial hemorrhage. SUMCO is taking a massive 5.8 billion yen structural reform hit right now.
Ouch.
Yeah. That figure includes fixed asset impairment, which is essentially writing down the value of their old factory equipment to zero, and aggressive inventory write-downs.
So what happens to the production?
The 150 millimeter production is being shifted to Indonesia to lower costs, and the 125 millimeter lines are just being killed off completely because the margins are toxic.
Let me play the listener's advocate here for a second, because if I see a company shrinking its addressable market, I get nervous.
Sure.
Isn't completely abandoning the legacy consumer and standard automotive markets a massive risk? Like, you are intentionally walking away from revenue.
It looks like shrinking on the surface,
Yeah.
but structurally, it is consolidation of power. They are taking the entire workforce from that Miyazaki legacy plant and retraining them to fight on the 300 millimeter advanced battleground.
Oh,
It is all about the economic moat.
okay, I see the logic there. SUMCO's moat isn't in sheer volume, it's in that atomic precision we talked about.
Exactly.
They are retreating behind the incredibly high, highly fortified walls of 300 millimeter advanced AI wafers. To even participate in that market requires crystal pulling technology and defect density control that Chinese competitors simply cannot replicate right now.
Right, the technical and capital barriers to entry are just too immense.
So it's a fortress strategy.
It is a fortress strategy, and it's sound on paper. But a fortress is only as strong as the global ground it sits on.
Oh, the macro picture.
Yeah. And as of late 2025, the macroeconomic ground is shifting violently. We have to look at the geopolitical friction points that are completely outside of SUMCO's control.
Right.
The policy environment in the United States right now is injecting a staggering level of uncertainty into the global supply chain, specifically regarding tariffs.
And let's be clear for our listeners, we are stripping the politics out of this entirely. We don't take sides on this show. We are looking purely at the mechanical, mathematical chain reaction of trade policy and how it hits an assembly line in Japan.
Absolutely. And the mechanics are brutal. Broad U.S. tariffs increase the baseline cost of imported electronic goods. When costs rise, U.S. consumer inflation spikes. The immediate result is that everyday consumers delay their purchases. You hold onto your smartphone for an extra year. You don't buy that new laptop or smart appliance.
And when the consumer stops buying, companies like Dell and Apple cut their orders from the chip designers.
Exactly.
The chip designers cut their orders from TSMC. And TSMC turns around and tells SMCO, hey, we need fewer wafers this quarter.
Yep. It is a massive, uncontrollable headwind to global semiconductor demand.
Just let that sink in for a second. Your company can manufacture the greatest technological product on Earth, but a signature on a trade document on the other side of the planet can stall your entire assembly line.
It really can.
So what does this actually mean for an investor's portfolio? Like, if you hold SMCO stock today, how sensitive are your returns to these macro shifts?
The sensitivity is extreme, particularly when you model out the foreign exchange exposure. SMCO operates in a global market where they sell their wafers in U.S. dollars. However, their massive manufacturing bases, their labor, their ultra-pure water facilities, their massive energy bills, those are largely paid in Japanese yen. That creates a massive mechanical vulnerability.
Let's quantify that vulnerability. What happens when the central banks start pulling different levers? Like, say the Bank of Japan starts aggressively tightening policy and raising rates, while the U.S. Federal Reserve starts easing.
Well, that specific spread drives the yen up against the dollar. And we have the hard data on what that does to the CO's bottom line. For every single yen the currency shifts against the U.S. dollar, it swings EONCO's annual operating profit by approximately 1.2 billion yen.
Wow, that number is staggering when you visualize the real-world volatility of currency markets right now.
Right.
I mean, we have seen the yen swing by 10 points in a matter of weeks recently.
Easily.
A minor 10 yen currency swing is the equivalent of wiping out or adding over 12 billion yen in operating profit overnight. And that 12 billion yen swing has absolutely nothing to do with the quality of their silicon or how efficiently they run their factories or their AI market share. That is pure exchange rate gravity.
Which perfectly explains why we need to open up the engine room and look at how these global crosswinds are actually hitting their fundamental earnings per share and return on equity.
Let's do it.
Let's dig into the absolute latest financial autopsy from their third quarter of 2025, because there is a glaring paradox in these numbers that requires a deep translation.
A paradox. Walk us through the raw numbers first.
So if you look at the cumulative sales for the first 3 quarters of 2025, they actually rose. The top line was up slightly year over year to 304.4 billion yen.
Okay, so they pushed more product. They brought in more revenue.
They did. Yet their operating profit absolutely cratered. Yeah. Like it plummeted from 29.9 billion yen in the same period last year all the way down to a mere 5.8 billion yen.
Wait, I really want the listener to grasp the severity of that. They maintained their sales volume. They brought in 304 billion yen, but the profit evaporated by roughly 80%.
80%, yeah.
A drop from nearly 30 billion down to under 6 billion. If I am reading that earnings report, my heart stops. Where did the money actually go?
Well, the causal link hiding in the income statement is one core operational variable, and that is depreciation.
Ah, okay.
We talked earlier about SUMCO retreating behind their 300-millimeter AI fortress. Well, you don't just decree a fortress into existence, you have to build it.
True.
Over the last couple of years, SMCO has engaged in massive facility build-outs. They committed heavily to both greenfield and brownfield expansions.
And let's define those terms quickly, because they carry very different weights.
Go ahead.
A brownfield expansion is upgrading an existing factory, putting new equipment on a floor you already own. But a greenfield expansion, that means buying an empty plot of land, laying the foundation, building the specialized earthquake-resistant structures, and installing the hyper-clean rooms from scratch.
Yeah, it is astronomically expensive.
So expensive.
And the accounting rules for those multi-billion yen investments are unforgiving. You don't expense the cost of the factory when you are pouring the concrete. You expense it over time, starting the moment that new factory comes online and actually starts producing wafers.
Right.
Well, the AI facilities in Saga and Nagasaki are coming online right now, and the bill has come due. In this third quarter alone, depreciation costs spiked by an incredible 22.8 billion yen compared to the previous year.
Ah, so the cash didn't physically vanish from their bank accounts this quarter?
No.
The cash was spent years ago during the construction phase. But now, the accounting weight of those shiny new factories is dropping like an anvil on their current income statement.
Exactly.
They are absorbing the massive upfront costs of their AI tech right now, which brutally suppresses their earnings per share in the short term.
Precisely. It is a non-cash expense today, but it is devastating to the reported operating margins. Absorbing a 22.8 billion yen depreciation hit isn't just a paper loss. It dictates exactly how management can deploy the remaining capital.
Because there's less profit on paper to go around.
Right. If your operating profits are being eaten alive by depreciation, it fundamentally alters your capital allocation strategy.
Which brings us to the core tension between management and the retail investor. Because if I am holding SUMCO shares, I am looking at my dividend yield.
Naturally.
I'm hoping for a share buyback to boost the stock price, but management is looking at the hyper-competitive 300-millimeter landscape and making a totally different calculation.
A very different calculation. They currently have a massive 340 billion yen capital expenditure commitment mapped out for facilities in Saga, Nagasaki, and Taiwan.
340 billion.
Yeah. They are prioritizing supply capability for AI over short-term balance sheet aesthetics. Maintaining an atomic-level precision monopoly at scale requires a blistering burn rate of capital.
Right.
Management believes that if they don't spend this 340 billion yen today to expand capacity, they will lose their top share position to competitors who are willing to spend it. They are basically betting the house that AI demand isn't just a bubble, but a permanent, accelerating paradigm shift.
Let me aggressively push back on that from a shareholder's perspective.
Okay, do it.
Are they genuinely shareholder first? Or are they just checking the AI growth box while starving their current investors of immediate rewards? Because the tension is palpable.
It is.
You have management pouring 340 billion yen into a future AI utopia, while today their legacy segments are bleeding cash, they are taking structural reform hits, and their operating margins are being crushed by the depreciation of the last expansion.
It's a lot to ask of an investor.
Right. It takes an almost religious level of faith for an investor to sit through this margin compression waiting for the AI payoff.
That skepticism is entirely warranted, and it is exactly why professional prudence is required here. It is
Oh.
our job to take off the rose-colored AI glasses and look at the blind spots.
Yes, let's do that.
There is one major blind spot in SUMCO's current trajectory where the data is simply insufficient to justify rushing into the stock blindly right now.
What is the primary friction point they aren't talking about loudly enough?
The timeline for the 200-millimeter legacy inventory correction.
Ah, the older stuff?
Right. We discussed how they are trying to pivot away from the low end, but they still have substantial exposure to the broader electronics market while that transition happens.
Makes sense.
And the demand for non-AI electronics, your standard smartphones, PCs, and basic consumer tech has remained depressed for much longer than anyone in the industry anticipated.
So even if consumer inflation cools down, the device manufacturers aren't ordering new wafers because they still have a massive backlog of the old chips sitting in their warehouses.
Exactly. Until that old inventory definitively clears, SMCO's overall shipping volumes for anything outside of the AI sector will remain heavily suppressed.
We haven't seen the bottom yet.
No, we haven't. Prudence dictates waiting until there is hard data proving the legacy wafer market has cleared its backlog,
Yeah.
combined with regulatory clarity on the final scope of those U.S. tariffs we talked about.
The macro uncertainty is just too high to build an accurate model of their future cash flows today.
It really is.
Yeah.
Which leaves us with a fascinating layered dilemma. They have the SUMCO vision, a historical mandate to survive cyclical downturns and remain stable.
Right.
Yet, to secure their future in the AI boom, they have taken on the highest fixed costs in their entire history.
The scars of the past taught them to build armor, but armor can become a fatal liability if it is too heavy to carry during a prolonged march.
That is incredibly well put.
And that brings me to a final provocative thought experiment for you, the listener, to mull over today.
Let's hear it.
We've established that SUMCO is aggressively trading short-term profit to build a massive 300-millimeter AI fortress, right? While completely surrendering the 200-millimeter legacy market to China. But let's look at the secondary effect of that surrender. If Chinese competitors secure a total monopoly over the high-volume legacy market, does that steady, massive stream of commodity cash flow eventually fund their own 300-millimeter research and development?
Oh, wow.
By retreating from the low end today, is SUMCO inadvertently handing their rivals the exact capital they need to eventually bridge the technological moat tomorrow?
That is a chilling, long-term question for anyone holding the stock. I mean, keep digging into the hard numbers, folks. Watch how those depreciation lines hit the upcoming quarters and pay really close attention to the macroeconomic crosswinds.
There's a lot to keep an eye on.
There really is. Thank you for joining us on this deep dive, and we'll see you next time on the Japan Stock Podcast.